Bitcoin just crossed $64,000, and the reason might surprise you. It's not on-chain, it's not a protocol upgrade, it's a peace deal on the other side of the planet. Stay with me. What's up, everybody? Welcome back to Vishmaster Crypto Daily. I'm your host. It is Saturday, June 14th, 2026, and we have a seriously packed show today. Bitcoin pumping on Middle East geopolitics, the US government pulling the plug on two of Anthropic's most powerful AI models, AI tools that could make the next billion-dollar DeFi hack look easy, SpaceX going public with over $1 billion in Bitcoin on the books, and a hard question about whether stablecoins have actually failed their own mission. Let's get into it. Alright, price action first, because Bitcoin is trading above $64,000 right now, and the catalyst is something most crypto traders had completely off their radar. Both Trump and Pakistan's prime minister came out this week saying an Iran peace deal could be signed as early as this Sunday. Now Trump is directly contradicting Tehran's official position, so there is real uncertainty about whether this is substance or just more diplomatic noise. But here's what matters for us sitting at our terminals. Crypto analyst Michael Van de Poppy came out and said very clearly that if this deal actually holds and the Strait of Hormuz reopens, you're going to see liquidity flood back into risk-on assets fast. And crypto is exactly that kind of asset. On top of that, ETF inflows are already at their strongest pace in a month, so institutional demand was already building before this headline hit. What we have here is a confluence, macro optimism, institutional buying pressure, and a market that's been coiling tight. Watch the 66 to 68,000 range as the next real test. If Sunday morning brings positive headlines out of the peace talks, that could be your green light. If Tehran doubles down and denies the whole thing, don't be surprised if we give back a chunk of this move quickly. Trade the confirmation, not the rumor on this one. Now, let's shift gears completely, because this next story is wild, and I think most of crypto Twitter is sleeping on it. The US government just ordered Anthropic to pull access to two of its most advanced AI models, Fable 5 and Mythos 5, from foreign users, effective Friday. And the trigger, according to reports, was a direct call from Amazon CEO Andy Jassy to the Trump administration. Other major tech firms piled on too. The stated reason is a specific security vulnerability. But here's where it gets interesting. Anthropic pushed back hard and publicly, saying this is government overreach, and that the vulnerability being cited is not unique to their models. It is already widespread across the entire AI industry. So what you actually have is the biggest cloud provider in the world, Amazon, which has poured billions into Anthropic, essentially calling up the White House to restrict access to its own investments' most powerful product. And the government complied within hours. That dynamic should raise some eyebrows regardless of where you stand politically. For crypto, the connection to this story runs deeper than it first appears, and I'll show you exactly how right now. Because here's the story that ties directly in. CoinDesk ran a piece this week with a headline that stopped me cold. Crypto's next billion-dollar hacker may move at superhuman speed. The piece is specifically about what models like Claude Fable 5 mean for DeFi security. The concern is that frontier AI puts extremely powerful cyber attack tools into the hands of bad actors at a speed and scale we have genuinely never seen before. DeFi has already been hit for more than $840 million in hacks in 2026 alone. That number is already alarming. But the argument is that autonomous AI changes the threat model entirely. It's not just skilled human hackers anymore. It's AI running at machine speed, testing thousands of attack vectors simultaneously, iterating on what works, and doing it all night while you sleep. Anthropic has safety filters. The government crackdown may partly be motivated by exactly this fear. But filters are not perfect, and pulling the product from foreign markets does not make the underlying capability disappear. It just makes it slightly harder to access. If you're playing in DeFi right now, your audit standards need to go up, your protocol insurance needs to go up, and you need to be watching your exposure more actively. Speaking of which, our Vishmaster bots flagged an unusual cluster of low-value probing transactions across 3 separate DeFi pools this past week. The kind of small, repeated pings that look like automated vulnerability scanning rather than normal trading. Nothing materialized into an exploit, but we stepped our fleet's positions back from those pools while the activity was live and rotated into cleaner venues. That kind of active monitoring is exactly what this threat environment demands. The era of set it and forget it, defy yield farming is over. Let's talk SpaceX because this is genuinely historic territory. SpaceX is going public, and when it does, it becomes the largest company on public markets that holds Bitcoin as a treasury reserve asset. $1.3 billion worth. Not as a product, not as a business model, as a reserve. And what CoinDesk is correctly pointing out is that this is the first real test of whether corporate Bitcoin treasury strategies survive a full bear market cycle under public market scrutiny. MicroStrategy built its entire identity and investor base around Bitcoin. SpaceX has rockets, satellites, Starlink subscriptions. Bitcoin is a line item in their balance sheet footnotes. That changes the incentive to hold. When you need cash for a Mars mission or a competitor undercuts Starlink pricing, does the board defend that Bitcoin position the way Saylor does? Or do they quietly liquidate during the next drawdown? The first few earnings calls after IPO will tell us everything about which version of corporate crypto treasury actually survives. Watch it. Last one, and I want to give this its due, because it deserves a real conversation. CoinDesk published a piece arguing that stablecoins have scaled as money but not as capital, and they've basically become idle cash. The original pitch for stablecoins was supposed to be transformational, disrupt banks, move money globally in seconds, settle instantly, unlock financial access for billions of people. And in terms of raw scale, they've done the first part. Trillions of dollars are now denominated in stablecoins. But the argument, and I think it lands, is that most of that supply is just sitting. It's a parking lot, not an engine. It's waiting to buy dips, sitting on centralized exchanges, being used for speculation rather than productive deployment. The real-world payment corridors, the remittance disruption, the deep DeFi capital formation, those use cases exist, but they are nowhere near the dominant story. If you're making the bull case that crypto is building the financial infrastructure of the future, stablecoins being idle cash is a problem you need to have an answer for. Just worth sitting with. Alright, that is your June 14th rundown. Bitcoin above 64,000 on geopolitical optimism that may get tested hard this weekend. The US government cracking down on Anthropic's top AI models over security concerns. AI tools making DeFi more vulnerable than ever. SpaceX going public with Bitcoin on the books. And stablecoins needing to find their purpose beyond being a fancy waiting room. Lot of threads to pull this week. If you want to stay ahead of all of it, hit subscribe. We are here every single day. Full fleet stats, model allocations, and live performance are at vishmaster.live. See you tomorrow.